After an absolutely breathtaking surge, silver has slammed into a wall. The entire market is just holding its breath at this critical moment. And the big question on everyone's mind is, what in the world happens now? Let's break down the battle lines. Right. This is the question. Has this rocket ship finally run out of fuel, or is it just pulling into a pit stop before the next launch? You can feel the tension in the market because, honestly, the stakes have never been higher.
And this is why. $79.70. On December 26th, silver futures touched that stunning record high. I mean, think about it. That's a price that seemed like pure fantasy just months ago, and now it's the peak that defines this whole situation.
Okay, so how on earth did we even get here? Well, this incredible spike didn't just appear out of thin air, not at all. It's really the climax of a story that's been building for more than a decade. So to really understand what's happening today, we've got to zoom way out. And wow, this timeline really tells the whole story, doesn't it? You look back at 2011 and you see that old peak near 50 bucks. Then, pretty much nothing for years. It wandered in the wilderness, hit rock bottom during the 2020 pandemic panic, but then the comeback starts. The really big moment, breaking out above $30. That was a massive psychological wall for years. Once that fell, the momentum just exploded, and that's what shot us straight up to that record test. Now, when analysts look at this huge multi-year picture, they see a classic and potentially very powerful chart pattern, the cup and handle. Just think of a giant U-shaped recovery, that's the cup, and then a little period of consolidation or a slight downward drift, which forms the handle. Chartists get really excited about this pattern because it often comes right before a huge continuation of an upward trend. And here's the kicker. Many analysts believe that's exactly where we are right now. We're in the process of forming that handle. So for anyone watching this long-term pattern, the number that matters most is $85.57. A sustained move above that would be a massive green light for the bulls. But if it fails to break through, well, that could put this whole beautiful bullish setup in danger. All right, so that's the decade-long view. But let's be real, the real drama, the fireworks, it's all been packed into just the last 5 weeks. This is where silver went from a steady jog to an all-out vertical sprint. This rally built up in clear stages. First, you had the base, a solid 7 weeks where it just hung out between $50 and $54, building a foundation. Then came the launch, a confident, steady climb over 3 weeks. But that third stage, wow, that was just pure acceleration. A frantic dash that shot up from $66 to over $75 in a single week. This is the part of the move that has everyone on the edge of their seat. But that incredible speed comes with a huge warning sign. As Dennis Jolet-Fatiaki over at FX Street points out, that final aggressive leg is showing classic signs that it's just running out of gas. So the very thing that made the rally so exciting, its incredible speed, could now be its biggest weakness. And this is a perfect way to think about momentum exhaustion. Seriously, picture a sprinter going flat out. As they get close to the finish line, their pace has to slow down, right? They're tired. The market is exactly the same. After that extreme acceleration, it needs to catch its breath. And that's when it becomes really vulnerable to a sudden change in direction. And in this moment of exhaustion, the market seems to have found a new center of gravity. That center is $75.78. This has become the pivot point, the single most important short-term price on the chart, where buyers and sellers are now digging in. You can just think of this price as the fulcrum on a seesaw. You've got the buyers on one side trying to push higher, and the sellers on the other trying to push it back down. The battle for control is happening right here. And whoever wins this fight is likely going to dictate the next big move. So this brings us to the present moment, a direct confrontation between the bulls who believe this rally has more room to run and the bears who are absolutely convinced the top is in. Let's look at the specific levels they are watching so closely. So what are the clear signals to watch for? For the bulls, the mission is simple. Hold the line above $77.90. If they do that, the upward pressure stays on. For the bears, their signal is a sustained break below that key pivot of $75.78. If that happens, it would suggest the rally has failed and that lower prices are on the table. This table just sums up the whole standoff perfectly. You have two different timeframes in play. The long-term strategists are focused on that giant cup and handle pattern, with 85.57 as their line in the sand. At the same time, the short-term traders are in a tooth-and-nail fight over that $75 to $77 zone, and the outcome of this immediate battle could very well influence that much longer-term trend.
All of this, the long-term patterns, the short-term exhaustion, it all boils down to one final essential question. And the answer to this question will ultimately define whether this historic rally was a true success.
And here it is. This is the core idea now. The whole conversation has shifted. It's not about how fast silver can climb anymore. It's about whether the market is willing to accept these new, higher prices as the new reality. Has the fundamental value of silver actually changed?
In other words, is the market comfortable living up here, in this new $75 to $80 neighborhood? Is it building a new foundation for future growth? Or was that surge to the record high just a volatile sightseeing trip before heading back down to more familiar ground?
Ultimately, that's the question we're left with. The fight between the long-term story and the short-term fatigue is what will decide the answer. Was this a permanent repricing of silver, or was that 5-week sprint the final exhaustive burst of energy? The answer is going to be written in the charts, and you can bet every single investor is watching.